We talk about stocks so much on this show that it can make us forget that stocks are only one piece of what is known as the capital structure, the whole shooting match of a company. Stocks are just one claim on the earnings of a company. Usually when we buy a stock, we think we own the company. And frankly, we do most often, except when the company becomes overextended with too much debt. It borrowed more than it can pay. Such is the case with the last two freestanding members of the big three, GM and Ford. They may have borrowed more than they can pay. In the last few weeks, we have heard a lot about how cheap these two stocks are because their prices have come down so much. 55-year lows, one down to the low single digits, another in the teens. We hear about how ridiculously valued they are, how low, how cheap. How many times, for instance, have you heard that Google, a brand new company, is valued at a massive 28 times General Motors? Or that Microsoft is worth 25 times more than Ford? How can it be? A software company more than all those plants and equipment? A search engine worth more than the largest automaker in the world, or the Toyota's Nippon? Here's the problem. It's not true. The capital structure is not what you think it is. Because when a company has too much debt and it either can't pay off that debt or just might not be able to pay it off, you get a scenario where the bond bullies take over. And they, not you, may end up being the real owners of the company. Take General Motors, where the book value of the equity is negative, or Ford, where the book value of its equity is barely significant amount of capital. Remember, the equity is probably what you own. And when you do the math, when you add up the debt, especially what's known as the senior debt first claim, these cheap-looking stocks turn out hardly to have any worth at all. Now, the notion of the bond bullies should be easy to understand because we accept them in all other walks of life. Consider your mortgage if you own a house. If you don't pay the mortgage, you don't own the house. The lender does. We recognize that. We also have to recognize that the same thing is true for companies. If you own a stock that has a lot of obligations to its workers, to bondholders, to the government, to pay taxes, you may also not be an owner, as those obligations come before yours. I think, that, again, that could be the case in both GM and Ford, where you're really not owning anything when you buy the stock because the bond bullies are slowly but surely taken over, which is why the stocks are coming down, aside from the fact that their earnings are so bad. Now, I had to learn this lesson the hard way, and I don't want you to have to do it. How did I learn? I invested in Bethlehem Steel in the 80s. Now, at one point, Bethlehem Steel was one of the largest companies in the world. It made fortunes. 6 of the top 10 executives in the 1960s, in terms of pay, worked at Bethlehem Steel. 3 beautiful golf courses. This place was fat and happy. But over time, pension obligations, healthcare obligations, and its obligations to the bondholders overwhelmed this company. Even though they had all this plant and equipment, and I'd been there many, many times and looked at it and said, I went to Burns Harbor, I went to Sparrows Point, I went to the beautiful facility at that point in Bethlehem. It had to be worth something. It was a bargain, right? The way GM and Ford look cheap now. But its obligations forced the common stock to disappear. It ceased to exist. One day, they just canceled it. They just canceled the common stock. After years of those obligations piling up, one day you owned something, then it was gone. Stock kept going lower and lower. It continually looked as compelling as Ford and GM until it vanished. It just went away because the bond bullies and the pension bullies, another source of common stock antagonism, took it over. It's the sequel to The Illusionists. You want to miss it. I believe there are a lot of situations out there that are right just like this. AMBAC and MBI, these are two I've maligned for so long, it's like I don't even want to bring them up just because it seems like such a victory dance, like one of those end zone victory dances that T.O. used to do. I have railed against those situations endlessly because I am concerned that the common is not in control. The bond bullies are. Several of the banks may have common stock that's no longer in your control. Now, see, I saw this happen in Citigroup in 1990. It wasn't until a huge Saudi investor came in to shore up the company that things reversed. Many banks didn't have such deep-pocketed saviors, and they went under. Household, real banks, banks that I banked at. 2 of the banks I banked at. One day I was there, the next day it opened up as a different bank. Now, I don't mean to startle people, but I think that a Bank of America, now that the Countrywide deal is closed, a Wachovia, a Citigroup, unless they get the kind of investors that saved Citigroup in 1990, I don't know. I don't know what will happen this time around. I believe a Merrill Lynch or a Lehman, someone's upgraded Lehman after the close today, sold to you. Now, I don't know if they're going to face the same fate as the autos, but I don't want to own them. At the end of the day, I think the common stock will not end up owning either Ford or GM. Will not, okay? The obligations, the ones to the creditors, come first. And I think they will be able to seize control of the company away from you. I would be recommending the bonds of those bondholders if I didn't think oil in the 140s wrecked the whole product lineup of both companies. But if you insist on buying these stocks, Ford and GM, you must know about and factor in the bond bullies, because they may take your common stock away, cancel it, crush it, dilute it, make it unrecognizable. If you're prepared for that, and I think the stocks will rally as soon as this quarter's over, which was today, if you're prepared for that, if you realize that stocks like GM and Ford are extremely speculative, far more speculative than anything I would ever recommend, because I fear that takeover by the bond bullies, well, if you're going with eyes open, I can understand. But I'm never going to bless the trade, ever. And if the stocks rally tomorrow, the next day, sell them. And remember, these are trades. If you want to invest in these companies, I think you'd have to do it by buying the senior debt securities, the bond bullies themselves, and nothing else. But frankly, I could take them or leave them too. Bottom line, don't be seduced by the single-digit Ford, by the low double-digit GM, by the supposed cheapness of a stock when the company it represents is so heavily in debt that the bond bullies could be coming to tear your common stock to pieces. I firmly believe that is the case for both GM and for Ford. Stick with Cramer.